Welcome everyone to this month's Blockchain Monday. Today we have a very special guest, Werner Hoffmann from Pekuna, who will talk about taxation in the crypto space.
Not see it since.
But
You don't have
before I hand over the word to Werner, I want to quickly introduce Aachen Blockchain Club for everyone, in case you're not familiar. So who are we? We are Aachen Blockchain Club, a student club formed of students in Aachen. And we are trying to be forward-thinking and dedicated on exploring all the potential that blockchain and Web3 has to offer. Can you please mute yourselves, guys? Thank you. And our goals, we have three different goals. We want to foster a community of students who are passionate about blockchain, especially in the student body. Then we want to establish partnerships with industry leaders in the Web3 space to offer students a seamless integration from the classroom to the industry. And the third thing is what our goals are is that we want to promote scientific development and educate students in the field of blockchain. And some previous events. So we had a bunch of previous Blockchain Mondays. We are going together to conferences. And you can see here's our patron, Professor Pillar from the Entrepreneurship Institute at the RWTH. So if you want to keep up to date with all our events, we have a bunch of events coming up in next semester, from hackathon trips to workshops to discussions. Feel free to give us a follow. Here's our link tree. You can scan it with your phone. And yeah, keep in the loop with everything we have up and coming. Some exciting stuff planned. So without further ado, I want to introduce Werner Hoffmann. He's working at Pekuna. Pekuna is a recently founded tax office for specialized in cryptocurrencies. So Werner Hoffmann, please, if you want to take the stage, you should be able to share your screen and present.
So yeah, my name is Werner Hoffmann. I used to work for the tax office for almost 10 years. I was civil servant, Beamter auf Lebenszeit. That means I was actually developing software for the tax offices that the tax office uses to calculate the taxes. I was part of the risk management team, which was one of the most innovative back in the days. They called themselves, they're doing like data analysis and things, which was rather simple and far off from what we call data analysis today. But it was still quite interesting, and working with the intersection of technology, data, taxes. I learned a lot during that time. I also started studying computer science on the side, which I later switched to a full-time degree, finished my degree. And during that computer science studies, I also got in touch with Bitcoin. That was around 2015, so good while back. And I invested a small amount. I was a student, so I didn't have a lot of money. It was, I think, 200 euro or something. And in 2017, I realized some gains, and then I asked myself, okay, I think I need to pay taxes on that, but I really don't know how to do it. And that was like one of the breakthrough moments where I realized, okay, I'm working for the tax office. I'm currently studying computer science. I really should know how to do that. And it's so complicated. Nobody knows anything. There's like 1,000 opinions on the internet. And that was 2017. So that was like all that was there back in these times was like Bitcoin and Ethereum just started, and ICOs was a big thing. So way, way back from all the complicated stuff we have today with staking and DeFi and a million different coins with tokenomics and all kinds of stuff. So everything was rather simple to compare to what's possible today. And yet taxation was already super complicated. So I reached out to a couple tax advisors that I found on forums who wrote articles about that topic, and really got down that like rabbit hole in the rabbit hole of legal, regulatory, taxes of all kinds of blockchain-based assets. And I realized, okay, there is actually a real need for this knowledge. And even though I'm not a tax advisor, I'm helping people to get through the the problems of their tax reporting, gathering all their data, like the technical part and the tax part, so the interpretation of what to do once you have all the data. I usually say, so you really shouldn't why you should pay your taxes is not why I'm here. So I'm here to help you why you want to pay your taxes on the crypto you have. So the big thing is that the legal thing is one side, but the bigger thing is in the end we all want to buy assets, be it the Lambo, be it anything else. And at that point, when we interact with real world assets, then usually there is some kind of state involved somehow, be it with a bank, if it's a car, with licensing, car taxes, is it real estate, then you have real estate taxes and so on. So no matter what you do, there is always some kind of state office involved, and then it gets complicated. And these authorities always want to know where you've made that money, how you made it. You need proof of funds, proof of wealth, and also oftentimes tax reports. And if then you don't have any data with the tax office, it's just going to get really complicated for you. And what also is very important to know, there is actually jail time on tax fraud. And since a couple of years, these rules got a lot harder. So it's not even that much that you need to hide from the tax office to already face potential jail time. So tax fraud is a serious delict that you shouldn't go easy with and rather take care of it. There's a lot of ways, especially in Germany, to do tax optimization rather than tax fraud. There is a lot of ways, we'll talk about those later, to have stuff tax-free. And using these methods are, Wolfgang Krämer, can you turn off your microphone, please? Would be very nice, especially if you're listening to radio. So in this talk, we only talk about income tax. That's what most people will be facing when they're dealing with crypto. If you're doing crypto from a company side, if you're having your own company, if you're making revenue in crypto, then there is a lot of other aspects as well, but we want to keep it rather simple for this presentation. So the biggest one in taxes, we always think in like different blocks or buckets. See, I should probably zoom in a little bit more. That's better.
Yeah,
So
that's
the most
better.
important one is the privates Veräußerungsgeschäft. That's what we call usually trading. Here we have a couple of rules that are important to know, and then you can basically apply this rule to everything that happens within privates Veräußerungsgeschäft, so you're trading. So you have the Jahresfrist, so the 1 year holding period. Everything that you hold for more than 1 year is completely tax-free. That's the biggest advantage that we have in Germany, and with around that rule, every kind of tax optimization is usually working. That you try to separate your assets and make sure that you hold them for more than 1 year. What's also necessary for trading is you have some way of a purchase and some way of a sell. This can be different ways. We'll get back to those later once we come to other ways of acquiring assets, for example, staking, lending, airdrops, etc. Then it's important to know, is this a acquiring step or not? We have the Freigrenze of 600 euros, so that's a limit of 600 euro. If you're more than 600 or starting from 600 euro, you have to pay taxes on the whole amount. This means the first, especially like not the first 600 euro of profit is tax-free, but up to 600 euro, everything is tax-free. If it's more than 600 euro, you pay taxes on the full amount. So then there is important to know there's also ways of tax loss deduction and first in, first out, but we'll get to those later, and account separation, also get to that later. Then there is the pot of other income. So here we all have the staking, lending, airdrops, etc. It's your personal tax rate. Also here there is a small amount of tax-free. I think it's 150 or euro or something around that amount. Then there is business activity that we will not talk about during this presentation, but you can read up a little bit more. I'll share the slides with you. Then there is capital income. That's also something that can be applicable, but usually not. The biggest thing is margin trading, and I can only highly recommend to not do margin trading on crypto because there's a big tax problem that comes with margin trading, that you cannot deduct your losses. So you can trade, lose everything, and still have to pay taxes on it. So that's really absurd, and in my opinion will not withstand the the highest German financial court. There is already some court rulings going on, but those usually take years and can be up to 10 years. And yeah, it's really big problem for some of my clients. So let's get a little bit more into details for trading, as this is usually the most important part for everyone who's investing. So the German word is privates Veräußerungsgeschäft. I also added the paragraph here. It's paragraph 23 of the income tax law. How do we calculate our gains? So we only tax profits, so it's not revenues, and not only the amounts that you're selling are taxed, but it's only the profit that you're making. To calculate the profit, you also need to get a purchase price that you can deduct. But how do you get the purchase price? Especially with an asset that you bought and sold multiple times. So here, first in, first out is the relevant calculation method. There is different ones. There is last in, first out. There is average, weighted average, and so on. But for tax purpose of calculating your income, here, first in, first out is the relevant one. So the oldest one that's in your wallet is the one that you use to calculate the acquiring cost, and that's the one you can deduct from your income that you generated to calculate the profit. In this context, it's also important to know there is account separation, German word Depottrennung. So this first in, first out method is calculated per wallet. Wallet can also be a exchange, a wallet address, everything that can be its own account, where you can say, okay, if I sold these Bitcoin on my whatever Kraken account, then the Bitcoin on my Binance account or on my hardware ledger are not the ones that I just sold. So whenever you can separate it, you should separate them. And this gives also a lot of room for actively maneuvering assets around, so to optimize your taxes. For example, if you want to have a savings account, then you can use, for example, a hardware wallet, a ledger, or something like that. While for other assets that you use more for short-term trading and have smaller profits, but rather want to use more active, you leave them on the exchange. So that is a very common thing to do. And for the short-term assets, then you pay the taxes that are usually smaller. And for the long-term holding that usually have the bigger gains, you have them tax-free. While if you would have everything in one wallet, you would constantly use up the the earlier lower amounts of the older assets that you wanted to hold long term, and then you pay taxes on everything. So what we're looking out for in tax law in general is what's the taxable event. And for trading, it's usually the sell, also crypto against crypto, also crypto against stablecoin, crypto against foreign currency. Leaving things on exchange does not break this rule. So even if you leave it on exchange, I would say questions at the end, Ali, if that's okay. Or what do you think, Lawrence? Then we have like one block of you're muted.
Whatever you prefer, Werner. We can also just do them at the end, maybe, if you prefer that. Yeah.
No, I'm fine either way. I'm just thinking about how is it easier to watch and to follow for everyone. We can let's make it more interactive. Let's go into the question so it's not me talking forever. And so yeah, Ali, go ahead, ask your question.
Um, for this part, you said foreign currency to crypto and crypto to foreign currency. For example, if you wanna well, for example, Binance, you first have to acquire USDT and then convert it to any other coin.
Yeah.
Are both of these taxable events, or
Yes.
okay?
Yeah. But with USDT or with stablecoins in general, you usually don't have a lot of gains or losses because they're kind of stable. So if you don't make a profit, then there is also nothing to pay taxes for. So your profit will be close to zero. Unless, of course, you're trading with 10 million and you're waiting a couple months and the US dollar price shifts or the pegging shifts or something. So I do have clients who also make quite big profits with stable coins, but that's a different story then, I would say. Probably for a normal person, if you like pay your euro into the exchange, then the exchange converts it into USD. You have to buy USDT or BUSD or something to buy your coin or your altcoin, or even if you need to go through a tax, buy it in ETH, then same problem that you have to acquire a different currency first, selling that currency again, and potentially also having profits in these in-between steps. Yeah. So yeah, and then there's a lot of special cases, starting from mining, staking, lending, airdrops, forks, and so on. And that's actually where things get really complicated, because for those who use your stable coins, yeah, just looking in the chat, Pedro says you use euro stable coins. That's of course also another method, but I've also seen those fluctuate as well. So stable coins are not as stable as they try to tell us. So say it will still be a taxable trade also if you do it in euro. So and yeah, so with all these things, there is like a couple core questions around them. One is is it a business activity? That's the one big distinction. And is the acquiring act already taxable itself, or is it only taxed when it's sold? So, for example, for mining, I'm not going into details for all of those. That's a little bit over the top for what we are having here planned for this presentation. But for mining, for example, if you're doing it as with your own mining rig, let's say you have in your basement a mining rig running, then the tax ministry considers that as a business activity. If you're paying someone to do the exact same, then it's a private activity because you're not actively running it, even though it's more or less the same. With mining, you can kind of make sense for that. It gets a bit more complicated if you're looking into staking, because the Ministry of Taxes has the exact same rules for staking, but they're not aware that running a staking node is something completely different than running a mining node. Running a mining node actually requires a quite hefty investment into hardware, setup costs, cooling, electricity, and so on. While staking, you can run on a Arduino or whatever, Raspberry Pi. All you need is the assets that you actually stake on that. But they say as well that running a staking node yourself, other than delegated staking or exchange staking, things like that, are a business activity. And yeah, so whenever it comes to these special cases, it's important to just make sure to declare them correct, because everything that you explain to the tax office, where they're able to build their own opinion around, then you're basically fine. Even if your opinion and the tax office opinion or the current leading opinion are different, or if you're doing it wrong, as long as you're declared it to the tax office, you're still fine, because then it's the tax office job to tell you you're doing it wrong. Because from then on, it's tax interpretation and not declaring what happened. Jumping back into the question before I get into the So who are big players in Germany and why do they stay here and not move elsewhere? So there is a couple of people who have quite significant portfolios that are also in Germany. And one reason is actually that the tax law in Germany is very pro crypto. So with the 1 year holding period, that's an amazing rule that you have in barely no other country. And I think that is probably one reason why they're still here. Question on the hold time duration, optimization and usage of different wallets. Are the German tax authorities already full capable of assessing all this? Not sure if every country is that far already. And by the way, after 1 year period holding, there is no taxable capital gains due. Are the tax authorities capable of assessing this? Probably not. Like, honest answer is no. But I also know they are creating special units. Like NRW, Nordrhein-Westfalen, is quite famous for having a, what are they called? A digital online criminal tax offense unit with, I think, 150 people that are also doing crypto. And these guys know what they're doing. If we're talking about bigger amounts, they will look into it. And now I'm basically continuing with my presentation to answer that question. So the legal part is one thing, but the bigger part is actually all the regulation that comes around it. So there's MiCA, CARF, and a couple others that I've not even mentioned here. So these are regulations that regulate the centralized units of the crypto space. Let's call them exchanges. Kryptoverwahrer is one regulation, and so on. And states are very good in controlling centralized units. So they give them a lot of regulations that they need to comply to, and they get data from these. So even if they're not fully capable of understanding everything you've done on chain, they will be able to require a centralized exchange to give them all the trading data, and including maybe even some kind of simplified tax report. And that's exactly what's happening right now, that more and more the centralized exchanges are forced to give more and more data to state offices, to tax offices, just as well as banks. If you're cashing out a bigger amount, banks will have a lot of questions, and if you're not able to answer these questions, they will block the transaction, they will cancel your bank account, they will block your assets. So that's quite, I've heard a lot of horror stories here where people are waiting for, like, best case money to be paid out to their account, but also completely their accounts their accounts blocked, and they're not even able to pay their rent. So, and another thing is they have 10 years time. So if you're thinking back, what did you do in 2014? You probably don't remember. It was a long, long time ago, but that's 10 years ago. And make sure that your 2034 you does not have to deal with all the mistakes that your 2024 you made. So even though they do not have the full capability of looking into all the data that's happening right now, one of the big disadvantages of blockchain is that the data is immutable, it's there forever, and at one point tax offices or third-party providers will be able to go through that. They are already working with other companies. For example, Chainalysis, here I've got a nice merchandise bottle from them. They are working for the German government. I don't know exactly what they're doing for them, but there is contracts that the tax office is using their service. So I'm sure Chainalysis, they know what they're doing, and they will support the German tax office to figure things out. And going back in the chat, what's important to remember is that audits can go pretty far into the past. They don't count on the finance and being able to do it today. Yeah, because they will figure it somehow tomorrow. Yes, exactly. And that's also why tax optimization is a lot better than tax avoidance. So rather try to separate accounts, to have long-term holding, to try to get over the 1-year holding period. You can save a lot of money by doing that rather than trading back and forth all the time. Your personal tax rate might be rather low at that time when you're still a student, when your other income isn't that high. But later on, if you're full-time employed, this can easily be 30 and 40%. And if you count 40% of your profits going into the tax office or not, this actually does make a big difference. Little disclaimer, tax law is different in every single country. So what I said now was only applicable for Germany. If you're in any other country, make sure to check your local tax law. Also, here is some more information on us. You can follow us on social media. We are quite active. We have someone in our team who's working only on the social media part of things, and he's posting a lot of stuff. So follow us on Instagram, LinkedIn, Twitter, TikTok, not so much anymore. We stopped doing videos, but all the other platforms do get regular content where we update about what's going on in the world of crypto and regulation, and more specifically also taxes, of course. So yeah, I think we do have a little bit more time for questions. So you can either write in the chat or
thank you,
raise
Werner,
your
for
hand.
this quick overview. And I would say, yeah, we take some questions from the chat. So please just feel free to, I don't know, yeah, raise your hand if you have any questions. I have one question for myself, I guess, a little tax question. So I recently acquired staked Ethereum, okay, and you get a reward for that. And I'm currently under the impression that you have to pay it with your tax bracket, right, as a normal income. Or how is that currently being seen, and how do I have to do my taxes for this year? Is that correct? Yeah.
Now that's the part where it's getting really complicated. So
Okay.
so here it actually depends. Is it liquid staked Ethereum or income generating staked Ethereum? Depending on what provider you're using, there is some that just increase in value over time and is not backed one-to-one, while others generate additional assets, and you get transactions usually daily with your staking income. If you're getting your staking income on a daily basis, then that is already the income that you're getting. If you're having liquid staked Ethereum, where just the value of the asset increases, then you're not actually income generating because it's just an asset that increases in value and you're trading. So here you even have the 1-year holding period. And with the income generating asset, you will pay at the time that you received the staked assets, and with your personal income tax rate, yes.
And how was that on the base, right? Is the 1-year holding period does that still apply? Or is that then, okay.
Yeah. I know there was some rumor recently, all based from a really clickbait headline from the BTC Echo, that die Grünen wollen die Jahresfrist abschaffen, something like that. But even if you read the whole article, which was behind a paywall, fair enough, then it says that they have like no actual plans, they have no proposal to change the law. It's just something they internally would like or have talked about once or something like that. Like it's super vague, and they actually know that it's not possible. So
I also heard that for that to take effect, they would have to classify crypto assets differently, because currently I think it's classified as Edelmetalle, or I don't know. Or what is the insight on that? Yeah.
Yeah, it's actually quite complicated. They could only make it for the future. Already existing assets would need some kind of exemption rule again. So then we would have a time where there is like assets that are under the 1-year holding period, assets that do not apply to the 1-year holding period. So it's quite complicated to change that rule. And
yeah, I see. Okay, I would say let's Ivan, do you want to step up and ask your question?
I actually have two questions. First one is what about those assets? For example, you go to a hackathon and you win a prize. How do you basically taxate this amount of money, or do you have to? Is it considered like an airdrop? Your opinion on this?
If that is something you're doing on a quite regular base and it's kind of your income, then you're a freelancer, then you're basically a software freelancer, and you need to register for that. For everyone else who's doing that on a, let's call it normal level, like twice or maybe 3 or 4 times a year, whatever, and it's not crazy high amounts, it would be considered other income. So you need to tax it at the current value when you receive the assets with your personal tax rate.
Okay. And what about, for example, this project like WorldCoin, where they basically give you like free coins every 2, 3 weeks? How do you tax them?
Yeah. That's actually a complicated one because the rule, so there is a clarification from the Ministry of Taxes that has, I think, 25 pages and clarifies like overall crypto assets and how they are taxed. And in this regulation, it's really just a, like, let's call it opinion paper, but it's the Ministry of Taxes who wrote it. So it's kind of important, but you don't actually have to follow it. You can have different opinions. It's really just a paper they wrote what they think is correct in the world of crypto. And what they say here is that if there is any kind of exchange of that you're doing something for it, it's taxable. Otherwise, it's not. So a lot of people assumed, including me, that like some airdrops, for example, are not taxable because you didn't do anything for it. But now recently, just this year in January, they further detailed that, for example, the ENS, the Ethereum namespace airdrop, is one of these things that you had to do something because you had to buy the Ethereum namespace, the ENS before that, and therefore that's already enough that you're qualified as you've done something, and therefore it's taxable. So this barrier of what is doing something, they said like really, really low. Just holding an asset is already enough. So before January, I would have said you're probably fine, should be not taxed because you've done that Euroscan 1 to qualify to sign up for it. But now you're not doing anything. But now since January, since they've set the barrier so low, I would say there is basically nothing that you can do that it's considered completely tax-free.
So basically, all the tokens which you received before January are tax-free, but the tokens
No,
after January.
no, that's not how it works. It was just clarified in January. They say it was always that way. They just clarified it in January.
Okay, okay. Let me see, let's see. Thank you.
So we have now, I would answer Peter's question in the chat next. So you're doing a complex trade involving wrapping, cross-bridging that effectively involve 4 or 5 individual currency. What is a reasonable way to determine cost basis of all these parts that will be accepted by the finanzamt? In other words, how does one obtain a record the correct price? Yeah, that's actually a really hard question. That's exactly what Pekuna is doing, keeping track of assets and creating reports that are accepted by the tax office. You will need to explain whatever you've done as detailed as possible. And now that you're already here, I'm going further and answer the question from Jan as well, related to the earlier question on WorldCoin. How about taxation of airdrops? Yeah, airdrops are a fun one. So airdrops, they really went above and beyond with the regulation and clarification that just raised so much more questions than answers. So there is, I think, just a whole page about regulation about how airdrops are taxed. In the end, rule of thumb, everything's taxable. At this point, I think the barrier is so low of getting a tax-free airdrop. Forget it. Problem is that if you have to tax it when you receive it, you'll pay money for it, like actual euro money, for a airdrop that you've maybe not even wanted, and that massively lost value as soon as you received it. So let's say it was worth 1,000 euro at the time you got the airdrop, and then it just kept falling and falling, and months later it's only worth euros. You will pay taxes on the 1,000 euro that you received. And only when you sell it within a 1-year holding period, then you're able to deduct the losses against that 1,000 euro.
Okay, thanks.
Yeah. Okay, then next, Benno.
Yeah, hello. In English, yeah. I've got a question. When I buy like Bitcoin over a trader like Trade Republic or Binance, do they take care of the taxes or do I have to do it myself still?
Binance for sure not. Trade Republic, I'm not 100% sure, because at Trade Republic you don't get actual Bitcoin. So there is no way to move them in or out. Same with PayPal and some other, let's call them neobanks, or trade brokers. eToro is also one. It could be that they take care of it, but I'm not sure.
Okay, thanks.
Ivan?
Yeah, just with the previous question about the airdrops, I was just thinking that this should probably be changed because I can literally create a token, like a smart contract, and I can airdrop it to you, and I can artificially like increase the value of this token, but somehow disable the selling function of the smart contract. So basically, you worth like thousands of euros with your bank account, but you'll never be able to sell them or exchange them. So it's doesn't make any sense because probably you pay taxes on assets which you'll never be able to sell again.
Yep. Absolutely. I'm very well aware of that.
Yeah.
100% agree with you. I think I even brought exactly that argument at a meeting with the Ministry of Finance.
Okay, I think Ali, you have another question. Please go ahead.
Yeah, regarding the airdrops. So some airdrops are staked when you get them, so you cannot unlock them yet. Is the time that you receive them the taxable event, or is them being unlocked the taxable event?
Yeah, that's a very good question. Whoever tells you they're able to answer that is lying to you. There is no clear answer. Because also here the German law is not really made for these cases. The proper legal wording is bei Erreichen der Verfügungsmacht. So once you can, they're fully yours, one could simplified say. But when is that time? That's hard to say. Pick the better one for you. Say that's the one you received it. See what happens.
Awesome. Yeah, I have another question. Where do you see, like in general, the taxes in Germany going towards? Do you think it's like, I mean, if they have in January clarified the airdrop taxes, that sounds like they want to increase taxes on crypto, or what is the general gist you get out of the political aspect?
I think it's not so much about increasing taxes. It's at this point more about setting a foundation for being able to enforce taxes on crypto without every tax office needs to think about everything themselves and make up their own rules, more or less. So to have like a German-wide standard. And I think that's more the phase we're in right now.
I see. So more like the clarification and also how to collect, basically.
Yeah.
Interesting.
Diana, did you have a question? You unmuted yourself.
Guess that's a no. Yeah. Okay, we still have about a few more minutes. Or are there any other questions in the room? Oh, I see, Peter. Please go ahead.
Yes, hello. I actually typed another question in the thread to follow up on what does Pekuna offer. If you could answer that, that would be great.
So what we are doing is crypto reporting. So to us, usually high-net individuals come and give us from their on-chain addresses to centralized exchange data or API keys. And we are creating a tax report. So we're gathering all this information. Sorry, really talking too much today. Gathering all the information, labeling, explaining what we did, making all these decisions of, is it an airdrop that's tax-free, that's taxed. Also go through more complex transactions, DeFi transactions that tools usually cannot automatically interpret what happened here, or people write their own smart contracts and we go through the transactions to make sure that everything's fine. Write everything together in a nice report. One second. But then, and that report usually then goes to the tax office. And yeah, then people have like, most important for us is that it's not even so much tax optimization. That's also one aspect to really make sure that they're not paying too much, but more making sure that everything is taken care of. They don't forget anything. They're able to sleep because they know the tax office can't come for them. So that's more of the core service that we are selling.
Yeah, thank you. In the question, I basically was asking more, you obviously have plenty of expertise in the crypto space, but high net worth individuals typically have other. Whoa. Oh, sorry, guys. Okay, so high net worth individuals typically have other problematic tax matters like real estate and so on and so forth. The question was, are you able to work only on the crypto part and defend that part, and then having a different steuerberater do whatever they need to do with real estate and so on and so forth? Or the German system is set up in such a way that there must be a single company, and if yes, do you actually offer other services aside from crypto, or people are kind of stuck?
Yeah, so we are not a tax advisor, so we're doing like a preparation step before the tax advisor. Yeah, sorry. And we're doing only the crypto part.
So basically, the report that you prepare goes to the tax advisor of the individual, and then the tax advisor forwards you any questions that might arise.
Yes, correctly. I think we need to end here. My voices.
Okay. I hope you don't lose your voice tonight. But yeah, okay. I think we had a bunch of good questions for you. I hope we didn't question you too much, but yeah, if anybody wants to reach out to you, they have your contact information. Maybe can you quickly share that one more time so people have that there. And yeah, thank you, Werner, for coming on and answering all our questions. I think at the moment we probably all are still poor students, right? But hopefully in the future we will have some gains to tax, right? And then having such a connection to you could be a big beneficial. Yeah. And yeah, without further ado, I would say we end it here. And thanks everyone for coming. Our next event will be in 1 month, another Blockchain Monday. And then we also have a bunch of other events coming up in April. So make sure to follow our social media for all upcoming events. And we're looking forward to seeing you in person again in the next semester. And see you then, guys. Bye. Thanks for tuning in.